Welcome back to ASX Market Watch and charting trend signals around the world. Guys, a very important update for you today. We're looking at trends, so market trends on your world indices, which will also help you determine which way 3 out of 4 stocks are heading as well. If you believe that 3 out of 4 stocks follow the overall market, of course, which a lot of people do. And we're also looking at a few things like, patterns around the world that seem to be repeating themselves. And when we have repeatable patterns, then we might be able to sort of, determine which way the market might be heading, in the future. Obviously, no one can tell the future. I'm definitely not going to pretend to be able to do that, but repeatable patterns, you've got to love them. They're a great thing, and that's why I'm very excited to bring this particular market watch to you today. Let's jump straight into it. Of course, we're checking out all the indices. This is the All Ordinaries down under Australia. This is the market that I personally trade. Last time we spoke, guys, we were talking about 2011. A lot of action on the short side in 2011, and that was about it, basically. Not very good for your regular superannuation funds or your your longs or your long holdings, or buying shares, in other words. Guys, obviously, All Ordinaries, this is your downtrend here. And, just as another sort of reference, I've included the 150-day moving average and the 50-day moving average. Guys, a lot of these things will work when you know how to use them. Obviously, the 150-day moving average is a great tool. I personally prefer trend lines, a very simple method. As you can see, there's your downtrend line. And as you can see, the market has failed to be able to close above it. In fact, it's bounced off this trend line many times, as you can see. So obviously the trend is down. Now, looking at repeatable patterns, this is the kind of exciting part on this particular chart. What we've got, guys, this is your, let's do a really rough random Elliott Wave. So say we've got 5 waves up, 3 waves down. This is 1, 2, 3, 4, 5. 1, 2, 3 down. Obvious. So next, in 2010, we got a very similar thing. We got 1, 2, 3, 4, 5, 1, 2, 3 down. And the third wave down actually went a lot longer than anyone anticipated, obviously, but still, it was a down wave. That's, what you have to expect when you're looking at your 1, 2, 3 wave down. That's exactly what happened. Now, check out this little section right here. Right there, we've got like these 2 little humps, and that's kind of exactly what's forming right at the moment on the All Ordinaries, and it's literally happening almost in exactly the same way. Just check them out. Those 2 humps there, these 2 humps here, albeit in a larger form, and obviously we had a larger fall here as well. So we had a small fall there, small humps here, large fall here, large humps here. Now, what happened after the humps was a rise for about 5 to 6 months. A lot of fantastic gains to have been made during that time. Apart from that, what we may expect is if the market does end up breaking above the 150-day moving average or the trend line, as you can see, they're in similar positions. So really, it doesn't matter which one you use. A lot of them will work. Whichever one you're comfortable with, that's fine. If it does break above that, then we may be in for a move similar to this of around 5 to 7%. When we get a move of 5 to 7% in the markets, then individual stocks and individual sectors can move a lot greater than that, bringing you potential gains. So that's how it works, guys. The market moves a small fraction, and individual stocks can move a large fraction within that overall market. I hope that makes sense. That's a lot of information to take in. But look, apart from that, we're still looking at this. We're still sort of staring down the barrel of this continuation pattern. So when we do get a continuation pattern, down move, little consolidation, and oftentimes if it breaks out to the downside, which quite possibly may happen, we're getting lower peaks and lower troughs here, then we may see a breakout to the downside and for the price to continue downwards. So just be very aware of that. Obviously, we're in a range at the moment, and it's yet to break out of any of these ranges. So when it does, that's usually and often the way that the market will continue. So pretty good, hey? That's awesome, if you ask me. I mean, it's great to know where we are, where the world is. This is the Dow Jones, and this is the SP500. I'll look at the SP500 just because it gives us a broader range. Now, this is an entirely different kettle of fish. One, because we're above the 150-day moving average, and we're above the trend line. So we're in an uptrend in America. America is in an uptrend, guys, and you know, I don't know how that works looking at the economy, but you know, sometimes you've got to follow the market. If we were to close back down below the uptrend here, which would be around about 1222 or 1220, that would negate that uptrend. So just be very wary of that. Until then, yes, it's definitely in an uptrend. So there's your trend analysis, and as you can see, it's above the 150-day moving average and the trend line. So that's kind of how that works. We've got resistance in the future. Look at this trend line here at 1320. So be very wary about 1320 on the S&P 500. Now, real quick analysis. As you can see, it's a longer-term sort of Elliott Wave. We're looking at it, and this is the thing. Elliott Wave is very subjective, so just be very aware of this when you're doing it. We're looking at 1, 2, 3, 4, 5, and then A, B, and then heading into a C wave, which takes us down. So, guys, I mean, this is the thing with the Elliott Wave. You can look at it many different ways, and a lot of people make hindsight calls about it, and I definitely do not rate that in any way, shape, or form. So follow the trend in the meantime, guys, and just be very wary of where the market may be heading, which at this current stage is up. Next, we're looking at the FTSE, and the FTSE really quickly is in a similar stage. Guys, this is it's definitely in an uptrend as well on the FTSE in Europe. And again, if we were to close below around 5,350, that would negate the uptrend. But it still is in an uptrend at the moment, guys. A lot of resistance coming up, but at the end of the day, you know, it has crossed above the 150-day moving average and the downtrend line. So it has to be called a short-term uptrend. It is on the FTSE. And again, you know, you don't know how these happen because the economy is, you know, not looking too crash hot, and yet the market does rise despite these things. So look, it is what it is. What else can you do? That's very simple analysis. Really quickly. The Nikkei, and this is Asia, so that was the Western world, kind of. This is Asia, and as you can see, the Nikkei in Japan, massive downtrend. Where did we find resistance just recently? Yes, exactly where we said it would, at the downtrend line. So basically, that is not rocket science in any way, shape, or form, and as you can see, it's well below the 150-day moving average. So guys, little continuation pattern forming here as well, just really quickly. If it breaks out to the downside below 8,320 on the Nikkei, expect lower prices. And if we just give ourselves a little bit of whoop, oh, that's right, yeah. So it may even head further down, round to about the 7,600, 7,700. 8,000 will be a very psychological number, just because round numbers are very psychological. You may find that it might find support at 8,000 as it's tried to do before. That's the Nikkei, very simple stuff. Shanghai Composite in China. And again, like, you know, Shanghai and China, they tend to be the markets. Oh, let's look at Hong Kong, actually. Hong Kong, the Hang Seng Index, but very similar to Shanghai, guys. Very similar. It's still in a downtrend, obviously. This is your downtrend, and again, like Australia, it's in this little continuation pattern. Now, what will happen, guys, just really quickly, if it breaks out to the upside above this previous peak, then that would be seen as a good sign. If it breaks out to the downside below this trend line here, that would be seen as a bad sign. And obviously, you would expect lower prices for that instance, or higher prices based on a breakout above there. So really, not rocket science in any way, shape, or form. I hope that has helped you in some small way. Please check out my website, asxmarketwatch.com. A lot of good times, a lot of free stuff for the stock market for you. And until next week, guys, have a fantastic week. I will see you then. Happy trending, and bye for now.